welcome. You have tuned into Buy Now, Sell Now on ET Now. I'm Shrishti Sharma and with me Cheryl D'Souza. And viewers, this is the show where you get answers for all your stock-related queries. In a short while from now, we will open the floor to get all your stock-related queries answered by our experts. And today we're going to be discussing about the TCS buyback as well in the Buy Now, Sell Now lens. So let's get started. And firstly, let's have a look at what the markets do. Cheryl, definitely a weak start for the Indian markets, but we seem to be recovering from the day's low.
Absolutely. We've seen some steady recovery actually kick in for the markets. Very good morning to you, Shrishti. But if you look at the benchmark indices, yes, we are off the day's lowest point, but nevertheless in the red territory, that you could say so, because if you look at the advanced decline ratio as of now, very much still in the favor of the decline. So we need to wait and watch, and let's see if this sort of recovery we are able to hold on to and build on to going ahead. But for now, as you can see it on your screen, Nifty is below 19,600 mark. If you look at Nifty Bank underperforming the benchmark indices, slipping as much as 0.8%. Let's actually put the spotlight especially on the broader market. Let's take a look at what mid-cap index and the small-cap index are doing, because both of them were underperforming the benchmark indices quite sharply. There you go, mid-cap index down about 0.9%. Small-cap index is low, trading low by about 1.2%. Yes, some sort of recovery kicking in, but they are underperforming the benchmark indices in today's trading session. Let's put the spotlight on the Nifty gainers and the losers. And if you look at the gainers, you have limited set of gainers in today's trading session, but the ones that are actually shining bright, definitely HCL Tech, one of the top gainers on the Nifty today. You have Dr. Reddy's, TCS, ONGC as well as IndusInd that are seeing some sort of a shade of green right now. But on the flip side, you have Adani Group of Counters taking a knock. So you have Adani Ports that's down about 3.7%. You have Adani Enterprises that's down about 2% on the Nifty, while BPCL as well seeing decline about 2%. Bajaj Finserv, SBI are the other set of losers right now. So if you look at the way how the markets are looking like, yes, all of them who are dependent on oil, you're seeing those companies actually see a sharp crack, because overnight, due to the rising tensions in West Asia, you've seen actually crude spike quite sharply. You had NYMEX crude that's back above the $85 to the barrel mark, and on back of that, you have paint companies, or for the matter of fact, entire companies that are taking a knock in today's trading session, and OMCs as well. So that's the way how the markets are looking like at this point in time. But yes, let's put the spotlight then on one of the top gainers on the Nifty today, Shrishti, and that is TCS.
Well, yes, over 1% uptick coming in on TCS, and no doubts there as the IT bellwether TCS is in focus on the back of the news flow around a fifth buyback soon. So let's try and understand that this time around what could be in store for all the retail participants, whether you should participate or not. We will get an expert take on that as well. But before that, let's get into all the details about the history regarding the TCS buyback, and this time what is the market penciling in, and Samit Sarkar is joining us to give us all those details.
Well, TCS has always been known for rewarding shareholders, and this is the fifth time that the company has announced that they will be considering buyback on October 11th. Now, in the past, there have been 4 buybacks which have been in the range of around 16 to 18,000 crore rupees, and at that moment, the company had utilized around 30 to 33% of the total cash in books to give away to the shareholders. Now, the buyback price that was considered by TCS on those moments was generally at a premium of around 18% to the current market price, and the acceptance ratio for this buyback. Now, this is the most important part for any retail shareholders. In the first 3 buybacks, that was in 2017, 2018 and 2020, the acceptance ratio for these buybacks stood at close to 100%, while the buyback that was done in 2022, the acceptance ratio fell to around 24% because more participation coming in from retail investors. Now, currently, if you see, TCS has a cash of could have a cash of around 60,000 crore rupees on its book. Assuming that it uses 1/3 of this cash for buyback, the buyback size could be anywhere between 18 to 20,000 crore rupees. And generally, given the fact that the company has kept the buyback price at a premium of 18%, the buyback price for TCS could be anywhere between 4,300 to 4,400 rupees, which means that a company could buy back nearly 1.13% of its total equity capital. Now, what is it in it for the retail shareholders? Now, if retail participation continues to remain high even in this buyback, like we had seen last time, the acceptance ratio could be on the lower side. Now, if the acceptance ratio is on the lower side, then generally the gains for a retail shareholder would also be limited. Now, assuming the buyback price is at a premium of 20% to the current market price, and if the acceptance ratio is as low as 25%, then the actual gain for any retail investor by participating in this buyback would just be 5% and not higher at around 20%. So acceptance ratio is the most important thing, and in the last buyback, the acceptance ratio had come down, and if the acceptance ratio continues to remain low, the gain for any retail investor would also be low by participating in TCS buyback. So keep an eye out for what is the buyback size that comes out on October 11th and what is the buyback price announced by TCS.
All right, thank you so much for that, Soumit, for putting all of that into context, explaining to our viewers what this particular move would mean for TCS and also the shareholders. But let's ask our experts what to expect out of TCS when it comes to the charts or fundamentals. We have Ashish Maheshwari as well as Kunal, both are joining us on the show. Very good morning to you, Ashish, as well as Kunal. Thank you so much for joining us on ET Now. And Ashish, let me come first to you. Along with buyback, you'll also have the all-important Q2 earnings coming in for TCS as well. So let's dive in a bit more on that particular front. One, what should you expect when the company announces Q2? What are you penciling in? As well as what's your view coming in on TCS and the rest of the IT pack?
As far as TCS buyback is concerned, I think investors need not to hurry and grab TCS stock, because I agree with your analysis. The acceptance ratio is going to be very less because now TCS is almost 13.5 lakh crore market cap company, and I'm expecting buyback, maybe 20,000 crore worth of buyback will come. So hardly you are going to get a lot of share accepted at a higher price, which I'm expecting should be at least 4,000 rupees if you ask me for TCS buyback. I think the market need to focus, or participants need to focus how their quarterly number comes. I'm not expecting any sort of disappointment as far as TCS numbers are concerned, because they are just showing moderate growth, 2 to 3%. I'm expecting this quarter also moderate margin expansion in 30-40 basis point, and minor growth is expected. Though stock has touched 52-week high also, but I think these stocks have not moved quite a bit for quite some time. So some amount of buying we have seen in TCS also. So in a nutshell, for the sake of getting handsome reward in buyback, you should not buy. Instead, focus on quarterly numbers will be better strategy.
Okay, so that's the take coming in from Ashish, not to be in a hurry for the buyback announcement, but the earnings will be the key to watch, and he's expecting the buyback price to be around 4,000 rupees. But Kunal, like Ashish was mentioning, that the stock has touched its 52-week high level. So just before the earnings, how are you seeing TCS on the charts, and what's your take on the IT space as well?
See, I think the stock chart for TCS is showing a very good recovery from the September 2022 lows when the stock was sub 3,000. Now at a point when the stock is already up 20%, the recovery seems to be far more stable for TCS. Of course, it's very difficult to predict what could happen post results for the stock price. But then typically we look out for levels, and I think in this case the 3,500 mark, which was the very recent support for TCS from where this rally started off, I think that should act as a strong entry point. So in case if the stock say corrects post result, if there is any kind of profit booking which happens into the stock price on the back of it, then I would believe that that could actually be a good entry point for a stock like TCS.
All right, so that's the view coming in from both of our experts when it comes to TCS. But on that note, we'll slip into a break on this edition of Buy Now, Sell Now. When we come back, we'll kickstart taking your query, viewers, so don't go anywhere. Welcome back. You're watching Buy Now, Sell Now on ET Now, a show where we get you answers for all of your stock-related queries. Remember, viewers, you can connect to us on the WhatsApp number that will be flashing shortly on your screen. Do remember to mention your name, the stock that you're looking to invest in. Already invested in a particular stock, then do mention the buy price as well as quantity, because in that way our experts will be able to help you better. But let's kickstart then with taking all of your stock related queries that already started pouring in on our WhatsApp number. The first one is coming in from Subramanian. He's writing to us from Chennai, and he wants to know, is it wise to invest today in this lower rate in the large caps to get short term gain? If yes, Kunal, could you advise to 1 to 2 stocks that he can look at investing in right now, large companies preferably for short-term gains?
Well, so buying the dip could be a good strategy, but I'm not sure whether from an immediate short-term perspective you may get any kind of a relief into stocks. But I think it's a good level where one could look to start accumulating many larger cap stocks. What you can ideally look out for, maybe from the larger cap names, something like L&T looks very attractive. from the capital goods space. You can look out for auto stocks. I think many of the larger cap auto names, the likes of Maruti, Bajaj Auto, even these stocks are looking attractive. And I think if you probably get Tata Motors maybe closer to 610, 615 range, I think that could also be a good level to buy the stock. So there are a few select large cap names which are coming back to their key support levels, as well as not breaking them, as well as many of the other peers are showing signs of recovery. So I think you can concentrate there.
Okay, moving on, and Ashish, coming to you for the next query. This one is from M. Mathivanan from Chennai, and he's holding two counters, sitting at profit in both of these. First is Zensar Technologies. He's holding 70 shares at a price of 350 rupees, and he also has Poonawalla FinCorp, 40 shares at a price of 290 rupees. Whether to hold these particular counters, or at this point in time he can go ahead and add more.
I think you can remain invested in both the stocks. Both are quite performer stock, fundamentally very strong companies, and in my view, they can even give you good returns going forward also. So Zensar and Navala Fincorp, both you can remain invested. Though I'll not advise to add at this price point because from your original purchase price, the stocks have quite appreciated. But remain invested as far as your old investment is concerned.
Okay, this one is coming in from S. Chatterjee, writing to us from Delhi, and wants to know about future growth outlook on Electra Green Tech. He wants to know whether it's a good buy at current levels for the medium term. Ashish, Electra Green Tech, have you tracked this particular counter? Because this one has been in focus on back of the thrust coming in for EVs as well.
Yeah, in fact, on your channel, I have advised earlier also to accumulate this stock, and what a run up this stock has given from 380 rupees to 1480 rupees in last 1 year. So stock is good. They are into making of electric buses, and the way the demand is picking up for electric buses as such, because a lot of municipalities are ordering these buses for local travel. I think the stock has got bright future. Only thing is, as the stock has seen a vertical run up, so some consolidation is happening in this stock also. So my suggestion will be to wait for around 1050, rupees to add this stock in any decline. Not now. Wait for some more correction from you.
Okay, moving on, and Kunal, the next query is coming from Rajesh Maheshwari from Indore, and he wants your take on Som Distilleries, whether or not it makes sense to go ahead to invest in this particular counter for short to medium term. He says that he already has exposure in Radico Khaitan, holding 110 shares at a price of 1070 rupees. So will it be more rewarding to invest further in Radico Khaitan, or he could make a fresh investment in Som Distilleries?
So the charts are interesting. Radico Khaitan has already gone through a correction from 1400 to 1200, and it's just meandering at the 1200 mark currently. So, which means that the risk reward could be a bit better to invest into the stock price for Radico Khaitan. But on the other hand, the only concern with the charts for SDVL or Som Distilleries is the recent news flow regarding the stock price. And I think today also the stock has formed a mild bottom at 355, 353 odd levels, and then recovered from there. So the catch is, in case if the stock doesn't break below the today's low, for example 350 approximately, then I believe you could probably expect a steady recovery going forward. So both the charts are very similar. It's just that for Radico, the risk reward could be a bit better to add at current levels. But for Som Distilleries, the good part is that the stock is riding on high momentum. So in case if the stock doesn't break its immediate low, you could see a more speedy recovery into the stock price. So difficult to just pick one out of the two, but I would probably prefer to maybe wait for another couple of days, and in case if is not broken on the downside, then you should definitely look to add Som Distilleries.
Okay, Kunal, this one's coming from Venkatesh. He's writing to us from Hyderabad, and you'll be amazed to know that he has 60 shares of HFCL, which he's purchased at the levels of 72 rupees per share, but he's bought this counter 8 years ago. Now he wants to know whether he should stay put with it or look to exit. And the second one that he wants to buy is Birla Soft, about 50 shares. Is it right time to buy right now?
HFCL 8 years ago, so I'm not sure whether it's an adjusted price for the stock price, because I think 8 years back, maybe in 2014-15, the stock was somewhere closer to 20-22 rupees adjusted price at current levels. So I'm assuming that you must have bought at lower levels and you're sitting in good profits. I think it's actually a good time to try and book out profits from HFCL. What was the other query?
The other one was Birla Soft. 50 shares is what he's looking to buy for a period of 1 year. Wants to know whether now is the right time to go ahead and buy Birla Soft.
See, I think it's a good stock. For example, in the last 2-3 months, we've seen very good recovery for Birla Soft from 250 levels to a point where the stock is coming closer to a breakout of a life high. I think 550-40 approximately is the previous high in 2021 for Birla Soft. Now, the only catch is that if in case the IT stocks deliver some sort of negativity in terms of results, then you may see one more round of correction into the stock price. If not, then you may probably be buying these kind of stocks maybe at a few percentage points premium from current levels, but the confidence level could be far more better. So I would advise to wait out for maybe this phase of another couple of weeks. In case these stocks show any kind of a correction, say 5% to 10% on average, that could be a classical time to buy these stocks.
Okay, moving on, and the next query is from a viewer. He didn't mention his name, but he has written his query a couple of times, so I'm taking this one. This query is on GNFC. Ashish, he's holding these shares 45 in quantity from a price of 653 rupees. Wants to know, good to hold for the long term, maybe for the next 2 years. Do you believe that this has a good potential to give returns?
If you are having 2 year time horizon, I think you can remain invested in this stock because again, fertilizer stock have given very good returns over a period of time. Though in last 3-4 months time, some consolidation is happening, but these stock will continue to do well because the kind of cash they have earned in last few years and all have diversified into along with fertilizer and especially the chemical businesses also will help to build their bottom line. So my suggestion will be to remain invested.
Right, moving on then, this one is coming in from Naresh, writing to us from Hyderabad. And Kunal, he wants to know about two counters. One is Munjal Shova, the other one is Snowman Logistics. Looking at his past queries, I believe that he's already invested in Munjal Shova at a price of around 146 rupees per share. Not sure about Snowman Logistics, but for both the counters, how are the charts looking? If he's already invested in Snowman also, what should his strategy be now?
See, as of now, I think Munjal Shova, for example, to start off with that, looks quite an attractive chart, and I'm looking at it on a quarterly basis. The last 2 quarters, I think the stock has shown exceptional jump in volumes, and the prices have also moved in a very similar kind of a manner. I think from 80 levels or 82 levels, the stock is almost at 150 plus mark very recently. It's now gone through a 10% correction from the highs. But then the last 2 quarters, as I said, the volumes have jumped up significantly high, which means that this could probably be a catalyst to the near-term trend for Munjal Shova. So I would recommend to hold on to the stock. Maybe in this phase of correction, you may see another 10 to 15 point drop into the stock price. So maybe closer to 125, 127. I think would be a good range where you can look to buy back or add further. For Snowman, on the other hand, I think it's better now to wait out for a breakout. 55 or 56 was the high the stock had made a few weeks back. That's a major resistance. Even in the last year, if I'm not wrong, the stock had taken resistance closer to this 50 plus odd mark. So which means that it's always better to buy these stocks on confirmation of a breakout rather than any kind of a correction.
Okay, that's the take on both of these counters. But with this, viewers, it's time to slip into a very short break in this edition of Buy Now Sell Now. Don't go anywhere. We'll be right back. Welcome back to Buy Now Sell Now, show where we get you answers for all your stock related queries. And continuing the same, Kunal, coming to you for the next query then. This one is from a viewer, which from the same number has written 3 different names. I'm not sure which one is the correct name, but taking the latest, he says that he's Raja from Bangalore and he wants your advice on Wipro. He has acquired shares at an average price of 412 rupees. It's been 2 years and the stock has given no returns to him. So what to do in this particular name? Any hopes on recovery and coming into profits? What will be your advice?
See, I think the stock has gone through a lot in terms of news flow. There was a point where Wipro, I remember in 2021, when the IT stocks were going through a stellar recovery, Wipro was one of the late movers, and then it tried to play a catch up from, I think, 200, sub 200 levels to 700, 680 or 700 odd mark for Wipro. So it's been a stock which generally tends to move late with respect to most of the other peers. So even right now, for example, when most of the IT names like TCS is already at a 52-week high, mid-cap IT stocks are doing pretty well. So it's bound to be that Wipro can underperform as well as be a bit more late starter. But then if the entire sector gets into a revival, it could just be a matter of time that even Wipro could play a catch up. So I would suggest to stick on to the stock in case if the IT stocks deliver maybe post results, if they deliver stellar returns on the prices for stock prices for many of these names, I believe even Wipro can come back closer to 455 to even 480 plus over the very near term.
All right, the other one also is coming your way, Kunal, actually, because it's a short-term query coming in from Indu and wants to know about NMDC. She's already holding the stock and she's making 15% profit in this one. So now she wants to know, is the uptrend still intact in NMDC? What sort of a strategy she should adopt, at least for the short to medium term? What should she go ahead and book profits?
So I'm extremely bullish on the prospects for NMDC. In fact, a few weeks back also I had highlighted the stock. So my expectation is that the stock is going through a big breakout on the quarterly chart, and it was just the previous quarter that the stock has shown that kind of an upward move. Surprisingly, in the last 1 or 2 weeks, the stock has just gone a bit more flattish at this 145 mark, maybe plus minus 5-7 rupees odd for NMDC. But I believe that whenever the next breakout happens for the stock price, it could lead into the stock going into even 175 plus mark. So if you can hold on to that kind of a time frame, and if you have that risk appetite, and if you're looking to take that risk, additional risk, then I would believe to stay invested into NMDC, because once that breakouts, if and when it shapes up, I think the stock should look very attractive going forward. So I would suggest to hold on.
Okay, Ashish, the next query is for you. This one is coming from Mani from Chennai, and he wants to know, can he buy Narayan Hydraulic as well as Ircon at current market price? If not, then if he can suggest any alternatives with a 1 to 2 year investment horizon.
As far as hospital stocks are concerned, they have also rewarded investor quite well. If you see in last 6 months, even Narayan from 700 rupees, the stock moved up to I think 1125 or odd, and now it's still available at 1065. Because all these hospitals have done a good expansion in the last couple of years, and they are enjoying very high occupancy rates also. So Narayan Hyderabad is a hold as well as a buy at 1025 rupees level in my view. So remain here, fundamentally very strong company. As far as Ircon is concerned, again a super performer stock. If you see in last 6 months time frame, and rewarded investor very well. Now under some consolidation for last 1.5 to 2 months. But again, fundamentally very good company. 130 rupees will be good level to buy afresh in Aircon.
The next query, Kunal, is coming in from Anu. She's writing to us from Gurgaon, and she's mentioned the fact that she's one of your biggest fans and she's learned so much from you. She's saying that she's a housewife and she has 250 shares of Poonawalla FinCorp at a price of 388. Parag Milk at a price of around 218, about 500 shares of that particular counter. Now, in the short term, she wants to know what should she do with both of these stocks. One is Poonawalla FinCorp, the other one is Parag Milk.
Thank you so much for that. First of all, now on both of these names, I'm extremely bullish on the prospects of Poonawalla FinCorp as well as Parag Milk. Now, I look at it this way, that Poonawalla FinCorp, I think from the recent high of 400 plus 420 or 440 approximately, has come back towards the 375 mark. It's consolidating at the lower end of the support in terms of moving averages. I believe it could just be a matter of time that the stock may get into a time-wise consolidation, but when it gets into a recovery, it should take the previous high 440 plus approximately for Poonawalla FinCorp and break past about those levels. So I think it's a risk reward to enter the stock at a 15%, 17% lower levels from the previous swing high. Even for Parag Milk, rarely do we see such stocks. So I think for the last 6 or 7 straight months, the stock has shown a V-shaped recovery. I think it was a stock which was sub 100 rupees 6 odd months back, and now the stock is about 200 levels. Exceptional volumes in this kind of a move for Parag Milk. So that generally indicates that the stock is getting ready for a bigger uptrend on the longer term time frame. And again, patience is required over here. I would suggest to stay invested into both of these names. In fact, if you can look to add Poonawalla FinCorp, in case if the stock dips say closer to 365, 370 mark, that could also be a good strategy.
Okay, Ashish, the next query is coming from Anjali from Nashik, and she's holding 3,500 shares of BPCL from a price of 375 rupees. You must have earlier guided her to sell this particular counter and move out, but she says that sorry that she didn't follow your guidance. So at this time when today's all these OMCs are under pressure, should she go ahead and sell this counter and rather buy and invest in Engineers India? What will be your advice?
I'm bearish as far as BPCL, HPCL is concerned. In my view, oil marketing refineries are going to face the heat if oil prices goes up. So instead of BPCL, I'll recommend you to buy Oil India Limited, which is at again 315 odd rupees a stock. The stock has moved today, but still it's a good buy. I'm expecting it may touch even 350 rupees in very short period of time, not long term. So instead of Engineers India, I look at Oil India Limited because companies like ONGC, Oil India Limited, they will do well if the crude prices will go up. And I don't think so that war is going to be over in 1 or 2 days. It will take some time. So crude prices will be on boil and will benefit ONGC and Oil India Limited.
All right, the next one is coming in from Durai, who's writing to us from Chennai, and this one is for you, Kunal. He wants your view on Reddington. He's purchased the stock at the price of 164 rupees per share. That's the average price that he has for 600 shares of Reddington. He's saying he's a long-term investor, but he wants your view on Reddington.
See, I have tracked the stock, from the point when I think the stock had bottomed out in 2020 around 40 odd rupees, 35 or 40 odd rupees. I don't remember the exact price, but that was the point when Reddington started to look very attractive. In fact, it was one of the few first mid-cap IT names, which had started to get into a breakout, managed to come back towards a 5-month high. 100 levels were crossed, and I think the stock had come very close to 200 levels. Maybe in the last couple of quarters. But of late, the stock has seen a lot of negative news flow surrounding itself, and that's why you've seen a sudden bout of underperformance. So these are like stocks which are very good quality, but then they go through some sort of negative news flow for a certain span of time. I think that's a advantage for long-term investors to actually get into such kind of stocks. I would believe that if you have a longer term time horizon and if you're ready to hold on to the stock, Reddington could be a good buy on dips even from current levels.
Okay, Ashish, the next query is on two power names. This query is from Jyoti, and she's holding JP Power 20,000 shares at a price of 9 rupees 50 paise, and HPL Power 2,000 quantity at a price of 260 rupees. She can continue this investment for the next 6 months to 2 years time horizon, whether to stay invested or move out of these names.
Jayaprakash Power is a company like where there's a small cap company, no institutional interest here, and I think there are some related issues related to NCLT, etc. also in the company, and a lot of debt related issues. So I'll suggest Jayaprakash Power may not be the right choice if you are looking in something in power sector at this price point. Instead of just the other you have bought, HPL Power is a better bet because again HPL Power is a leading supplier of coverage equipment for Indian Railway as well as they are doing some pioneer work in batteries for EVs etc. also. So HPL Power in my view has a potential to touch even 350 rupees mark by March 2024. So I'll recommend HPL Power instead of Jayaprakash Power.
All right, let's move on. This one is coming in from Neela, who's writing to us from Chennai. And Kunal, Neela is a retired banker looking for a long-term investment, but the stock that she's asked for is Suzlon Energy and Yes Bank. Is it the right time to invest in these particular counters? She's requested your opinion on it. So what's your take, even if it's a long-term investor or a short-term investor, given the fact the profile is the fact that Neela is a retired banker, do you think it's advisable to look at counters like Suzlon and Yes Bank for investment right now?
See, I have a very simple logic. You buy good stocks on bad news rather than buying bad stocks on good news. So even though stocks like Suzlon or Yes Bank, they may look very attractive in terms of the price trends, but we've seen what historically how these charts and how these stocks have performed. So there'll be bouts of rallies for these stocks, but I strongly believe that it's always better to try and participate into formidable names and create a solid portfolio, especially at a profile of what you have right now. It doesn't make sense into getting into these smaller cap names and trying to take that additional risk in your portfolio. So I would probably suggest not to look at these stocks. Specifically looking at your profile, would look to suggest to start investing into the larger cap names. And many of these large cap stocks are now available at a multi-week, multi-month low for themselves. So it's always better to try and park your money there.
Right. So then some examples that you can give where she can look at actually investing her hard-earned money, in fact, at this point in time.
So I think look at, for example, HDFC Bank. I think it's a classical chart over here at current levels of 1500 approximately. Reliance Industries at 2300, I think is a classical buy. You can look at Bajaj Finserv, a stock which has been a relative underperformer with respect to Bajaj Finance. That also is looking very attractive. And there are so many of the other stocks in a similar kind of a category which you can look out for.
Okay, Ashish, the next query is on ONGC. The query is from K. Partha Sarthi. He's a senior citizen and wants to know how do you look at ONGC? He's holding 150 shares, 100 shares, I beg your pardon, at a price of 150 rupees. And with the kind of momentum that we are seeing in the oil prices, do you believe that there could be further upside for ONGC? Good time to book profits or stay invested?
No, I think stay invested. Even if you see last 3 months, the stock has given almost 12% kind of return already. So it also depends like how the crude will behave in next 1 or 1.5 months, because crude is a very crucial territory nowadays. So if the crude prices again breaches $90 mark or $95 mark, you will see ONGC again 195 to 200 rupees, which is ahead of its 52-week high. So my suggestion will remain invested in ONGC.
All right. This next one is coming in from B. Soumya, who's writing to us from Chennai. Kunal, this one is for you. Wants to know about TV18 broadcast as well as ITD cementation. TV18 she bought at 48 rupees, ITD cementation 188. What is the short-term targets for both of these counters?
See, ITD cementation is an attractive chart. The stock has been a very consistent kind of a mover in the last 2-3 years. Even the last 6-8 months, the stock has moved from 100 levels to 240, which means that there is definitely a strength in this recovery for ITD cementation. I think now the stock, I think if I'm not wrong, is corrected marginally, some 7% or 10% from its recent swing highs to 40 approximately. So that makes the entry point for ITD cementation a bit more lucrative. If you've already bought, I would recommend to hold on to the stock. TV18 on the other hand, not too much enthusiastic about the stock price. I think if you're looking at concentrating on media spaces or media space as at large, you should definitely look at Sun TV at current levels of I think 600 or thereabouts for the stock price. It's shown excellent chart patterns and holds a lot more better prospects.
Okay, that's the take coming in on both of these names. But with this, viewers, it's once again time to slip into a very short break. Don't go anywhere. We'll be right back.
Welcome back. You're watching Buy Now, Sell Now on ET Now. Let's continue taking all of his stock-related queries then. The next one is coming in all the way from Japan. It's from Sunny. And Sunny is a long-term investor and he's written to us after a while actually. He wants to know whether it's the right time to add Balaji Amines as well as Navin Fluorines at current levels in his portfolio. He's already holding 200 shares of each in his portfolio. Kunal, do you think it's advisable for now at this current price to add both of them in his portfolio? Because we've seen actually these chemical names also take some beating in between, right?
Yeah, so I think Navin Fluorine, of course, I think the stock has been in the recent news flow regarding the senior management. But I believe it's better to buy both Balaji Amines or and Navin Fluorine at a swing breakout. So for example, Balaji Amines, the swing breakout level is around 2,500 mark, 2,545 to be precise on the spot levels for the stock price. That could confirm that the pattern of lower highs and lower lows, that is now over for the stock price, and you may see a steady recovery going forward. For Navin Fluorine, I think that level of a swing breakout is closer to 4,250, 4,200 levels. So I understand that the stock is significantly lower from those levels at current juncture, but the only point is that after that sharp selling and the gap down for Navin Fluorine, that's a major resistance which has been established, and it always makes sense for long-term investors to start nibbling into the stock price at the first sign when these major resistances are crossed over. So I think these are the two levels which you should keep an eye on.
Okay, Ashish, the next query is one on the recent listing, that is Idea Forge. Subramaniam has invested in 50 quantity at a price of 30 rupees, and the stock is seen to be coming lower. So should he continue holding this particular counter till the results or book loss at this point in time?
The previous show discussion came that somebody wanted to buy Idea Forge as a investment for drone technology companies. At that time, also, I communicated that this may not be a good price to buy because again the valuations are quite rich, and the way we have seen liquidation from 1,300 rupees to this price is still market cap of company is 3,000 crore plus. So valuations are still very rich. I'll advise even not to average, but wait for approximately 700 rupees mark for any fresh entry. Don't be in hurry to buy this. You will get this stock at lower price.
One is coming from Narsimha Murthy, who's writing to us from Pondicherry, who's retired as well, Kunal. He wants to know whether he can look to add geographic bio on based on technical analysis in his portfolio. I'm unsure if he's already purchased this, wants to add some more, or is it a fresh buy? But do you think geographic makes sense right now for him?
I don't track the stock, Cheryl, so I'll skip this one.
All right. By any chance, have you seen this particular counter, Ashish, geographic bio? Are you tracking it? Or based on fundamental, okay, you've already nodded your head, so which means you don't track this one. Okay, let me take the next one then. This next is coming in from Arun, who's writing to us from Bangalore. He has Man Infra, about 100 shares at a price of 82 rupees per share. Ashish, he wants to know, does it make sense to stay put with this counter for the longer term?
It's Man Industries, right?
Yes, Man Industries, Ravi. Man Infra, sorry, it's Man Infra.
Acha, Man Infra.
Yeah.
What was the purchase price?
82 rupees per share, about 100 shares of Man Infra is what he has in his portfolio.
Okay, I think the stock is hovering at the same price only. Or more. Okay, well,
the stock right now is around 154, so he's sitting on good profit right now when it comes to Man Infra. So do you think that for the longer term, based on fundamentals, he should stay put with this one or book out profits and move to some other counter?
No, I suggest to remain invested here. Again, Mumbai-based infra company with a lot of real estate projects now they are having. So they will continue to do well. Remain invested here.
Okay, that's the take on Man Infra. But with this, viewers, let's kickstart taking all your stock-related queries in the rapid-fire session. And the first query is for you, Kunal. The query is on TTK Prestige. Vara Prasad has been holding shares at a price of close to 800 rupees, sitting at a loss in this one. What to do next?
Just hold on to the stock, no need to average at current levels.
Okay, this one is coming from Sandeep Kumar from Tamil Nadu. This one is for you. Ashish wants to know which is the best defense stock that he can look to invest in for a period of 3 to 4 years right now.
I think Hindustan Aeronautics Limited in large cap.
Kunal, B. Behra has bought 100 shares of Graphite India at a price of 509 rupees. Whether to hold on or book loss in this one?
I think you should hold on to the stock at current levels. In fact, look to even add in case if it dips towards 470.
Kunal, IEX Sudha has about some shares at a price of around 206 rupees per share. Advisable to stay put or look to exit?
Just hold on to the stock as of now.
Okay, Kunal, how are the charts looking like for Reliance Industries? The query is from Chandrasekhar.
If you're a long-term investor, the stock is looking attractive. I think it's come back towards exactly its 200-day moving average. That could act as a good retracement support.
Okay, this one is Padma, who's a senior citizen and has Kajaria as well as Sheela Foams, not making any profits in this one. Should look to exit and look to buy metal or auto space counters. What's your take on this, Kunal?
Well, I would suggest to hold on to both of these stocks as of now.
Okay, Ashish, any take on Yes Bank? Shrikant from Chennai has bought 1,000 shares at a price of 24 rupees 40 paise. Can hold for the next 1 year. Worth holding. Ashish, your take on Yes Bank? Okay, Kunal, your take on Yes Bank? I think that we have snapped that line with Ashish.
I would suggest to exit the stock.
Okay, let me stay put with you, Kunal. Then this was from Pranjali from Kolkata. 50 shares of BPCL. Average price is 356 rupees per share. Wants a view whether she should continue to hold on to it. Good time to average or exit.
Exit the stock on minor rallies. I think maybe close to 345, 348 levels.
Okay, but with this, viewers, we are completely out of time in this edition of the Rapid Fire session as well as onto the Buy Now, Sell Now show. Thank you so much, Kunal and Ashish, for joining us today on ET Now and helping all our viewers with the stock-related queries. But with this, viewers, it's time to wrap this edition, and it's a goodbye from me and Cheryl and the entire team who put this show together. Don't go anywhere. Markets at noon will take the action ahead.